Hello traders and investors, welcome to the Trading Direction. I am Anil Hanegave, full-time trader, author of the book Profitable Trading Strategies with Psychology and CEO of Trading Direction. I welcome you to very important video on the momentum trading and trading strategies with momentum. So what is momentum? When you try to apply the stock trading strategies to the option trading strategies, then probably you are doing mistakes, because in stocks the momentum is not there. You need not require to focus on the momentum. The speed at which the prices moves is known as momentum, and the ability to maintain that speed is known as the real momentum. Why option trading, especially option buying and stock tradings are different? Because the stock prices are not dependent on various factors, whereas the option buying, the premiums are factors, they are much more dependent on the various factors like volatility, intrinsic value, theta factor. So these are all calculated. When the volatility is high, the premium price appreciates, and there what the option buyers get more profit. Yes, if you want to, your habit is to buy at low and sell at higher, then definitely the momentum is not there, and probably you are entering in the market, the direction is right but momentum is low, so that is also making mistakes and you are maybe probably losing losses. But somewhere the why regular some traders are regularly earning money in the option buying, because they only practice option buying and they learned detail about the low momentum area and high momentum area. So somewhere the consolidation phase is there, consolidation area is low momentum area where the candle size is comparatively low, and whereas then when it gives breakout, the breakout are different types, the trend line breakout, CPR breakout, consolidation area breakout, support range breakout, resistance breakout. So when it gives breakout, the size of the candle is high, and that indicates the momentum creation. It indicates the speed or the creation of more volatility, and at that time you need to enter. Especially, yes, it creates some little confusion, because the ordinary trader will not enter. They will think that no, once it come for the low I will enter so that I will get more price. No, it will not work like that in option buying. In option buying you need to enter at high and sell at higher. Enter at high and sell at higher. So buy at high means buy at high and sell at higher means, so here when the momentum is already created, that time you need to enter. Maybe probability you can catch the in that speed when the momentum is high, the volatility is high, the transaction is much more, and that creates the premium appreciate, and there what you can easily get 100 points, 200 points, sometimes 300 points also. But if you want to earn regularly from the option buying, 100 points are sufficient. 100 points are sufficient that you can capture when the momentum is created. We will see what is the high momentum area and when you will get high momentum, and what are the trading strategies with high momentum.
This is low momentum area. Especially the trade or the bank nifty prices, when it trades in the CPR central pivot range, that area is low momentum area. You can see here once prices moving away and again coming to the central pivot range, again moving away. So this area is a low momentum area. Size of the candle, the relatively small and relatively moving at the low speed, whereas once it gives breakout here, the once it has given breakout, the size of the candle also increased and moving at the fast speed. Here one time the prices want to move away but quickly fades with this the red candle, and they are moving is the opposite direction. So they are neutralizing the speed of this bullish candle. So this is the low momentum area. Whereas if this green candle has given very good move, but it fades its speed by formation of small candles, and it is not able to give the successful very good momentum. This area will decay the premium, so premium rates will reduces. So this will avoid, this area you should avoid for the option buying especially. So where the momentum is high, that we are learning, but this area will decay or consume your premium. Earlier we have seen the range bound market. Now we will see here the trending market. The prices are moving higher highs and higher lows, but the prices are moving relatively in this area, they are very slow. So with the consolidation like phase, so they are moving slow, red candle, green candle, red candle, green candle. So this area is also having the decaying of theta factors. So this will also not give a very good appreciation of premium. So whereas the starting move initially it has given the very good the momentum, and especially this area up to 10 o'clock. So after that it was having little choppy market, and afternoon session after 1:15, so it has given little momentum. So you need to remember, so especially afternoon session the market is remaining choppy during the trending market also. So if you are a future buyer, so you can buy it here or sell it here, but in the momentum trader or the option buyer, they cannot do like this. They need to catch this move, okay, very fast move. So that strategies also we will learn. So first understand where is the good momentum. In Bank Nifty, here is the example what true momentum looks like. Here, the especially the narrow central pivot range day, once this Bank Nifty breakout of this consolidation area, okay, and this is the real momentum. So this momentum trading you need to do, and once you do practice in the Bank Nifty option buying, here if you buy the 38,900 call option, so that premium, if suppose it is trading around 200 or 150, it will easily go up to 600 to 700. So that 2 to 3 times, in fact 4 times appreciation you may get. Sometime the prices were at 10 rupees, that gone up to 500 rupees. So that appreciation you will get, especially this momentum area. Okay, so this breakout, this consolidation area breakout, this is the true momentum, which is having steep trend line, steep. So this area you need to capture. Here you can see, here the price has rejected one time, and earlier also it has bounced from here. So this is the previous day low as well as R1. So this area acted as a very strong support, and once how we will come to know the momentum is high. So you see this is a 5 minutes time frame. So candle size is relatively higher than the average of this box candle. So this consolidation area, if you see, the average size of this candle is high, and it is increasing slowly. If you see, this candle is high. Again, the inside bar candle formation happen. If you are not watched the inside bar candle video, so then I link is there, the or the description box, you find the moment this inside bar candlesticks pattern, and go and watch, that really gives very good momentum. So once it cross this, the relatively candle size is high, so this indicates the relatively higher candle. So here what we need to do, the opposite of what the suggestions given to the beginner traders ideally. So they, for normal traders, they give trading advice that you need to buy here. So but what we suggest here, once this candle crossed, even though this relatively higher candle, you can enter here or enter here, or suppose this candle is closed here, so this once this crossed, you can enter here. So even though prices are higher, you can enter and catch very good move. So this is the really helps you in the option buying. If you see here, the momentum trading goes against the popular trend trading advice. So trend trading, they say they buy at or sell at here and buy at low. But the momentum trader says when the momentum is created, buy here and you can sell here. So when the momentum is created, you can enter. So momentum trading is like opposite what the traditional traders they are doing. So this is giving a very good momentum, and this area will give you a very good benefit. So buying here or selling here in the selling concept, so it will not work. Initially we need to find out the momentum. Once we identified this momentum and crossed this support, so we indicates that the momentum is creating, and once this break trend line is broken, so that indicates the momentum is created. So you can enter here, but the question is where to keep the stop loss. The question is where to keep the stop loss. Here you can use the entry candle as a stop loss, or 50% of the entry candle is also a stop loss in the momentum. But when the momentum is high, the volatility is high, so you can easily book at least 100 to 200 points easily, so without doubt. So that is why this says the very high return and the accuracy pattern or the momentum trading is very accurate and gives very good profit. Low momentum trader, they see, they wait for the retracement, and once the retracement completes, they want to enter. But the high momentum trader, they usually enter here. So when the regular trend following traders, they say this is already high and they wait for the retracement. But the quick entry by the momentum trader, once it crosses this R1, or if it is a resistance is there, once it crosses, enter immediately and exit once this crosses, especially once three candle, or once this red candle formation happens, or which breaks this low of this previous candle. Or you can wait here, the candle is not closed, this candle you can exit. So this way you can get very good momentum, and this momentum is very good comparatively this way. So this is a kind of choppy market. This moves you will get without doubt very good profits in the market. Now let's get into the strategy. Market moves the period of low volatility into the high volatility. So high volatility is preceded by the low volatility. So this, when low momentum is there, you should be ready for the high volatile movement. So whenever the consolidation happens, this is almost 1 hour consolidation. Whenever this range breakout happens, so this gives a very good high volatile move. But once it has given a very good volatile move, the here you can enter. So ordinary trend following traders, they will not enter here. Okay, definitely they will not enter here. So you can enter and exit here within one candle. You can see the very good, the high appreciation of this premium price you will observe. This area is again the consolidation phase. Once this consolidation area breaks, this specially, so it has given the high volatile move, again it has formed a consolidation area. Once it has given breakout of this high, again this has given a very good momentum. If you see this consolidation area, the candle size is relatively small and that lacks the direction. Okay, so direction we cannot decide, but these candles are relatively higher in height and it has very good conviction of the direction. And here we need to quickly enter with the market order and quickly exit with the market order. So that is the real momentum trading. Similar examples we will see once this consolidation area is there. This candle length is comparatively 2 to 3 times higher than these candles. So that indicates the creation of the momentum. So once this red candle is overtaken and this wick highs crossed, you can enter, and it has given a very good momentum. So larger candle size is also indicates the exhaustion of the buyers, this inventory. So here also you can exit. Okay, so this has created very good momentum. See the first size when this broken this area and we can enter here. So this momentum is giving very good appreciation of the price. Here also you can see once this consolidation area broken by this momentum candle, very high momentum, and the height of this candle is very high, comparatively 2 to 3 times larger than this consolidation area. So this gives a very good move. Okay, sometimes the stop loss get hit. So here, so you need to exit here. Sometime it happens few times, and if it really happens you can exit here, and if it is weak so you can again enter here. So it gives very good fast momentum. So if you enter here by see first momentum candle, and once this area got broken, if you enter here where to place stop loss, this placing stop loss for full candle is the high risk. So you can roughly place the stop loss 50% of this candle, and sometime when the momentum is high it gets price get higher highs, and the chances of returning that price and creating the low is very low. So that is why this is a very high probable move, and this is a sure shot and with high rewards trading. Up to this candle you can be in the trade and exit here once this green candle is overtaken by this red candle. So this is the indication that momentum is now becoming low, so you can exit here. I hope you like this very important session on the momentum trading. Really, if you like, smash the thumbs up button, share with the trading community, and comment your feedback what you really learned this and how you are using in your daily trading. And if you have special question you can ask in the comment section. Thank you very much.